In 2021, over 1 million homebuyers were cheated out of buying a house by big investors. How bad is it? Well, unfortunately, it looks like it's getting worse, as we can see from this post by Commercial Observer. Nearly 1 in 5 US homes sold in the fourth quarter bought by an institutional investor. By the way, those investors are actually big corporations, not mom and pop investors. Thank you for joining in. My name is Andrew Finney, and I help people take the guesswork out of real estate with educational videos like this one. For more informative videos like this, tap subscribe and welcome to the Home Tribe. Okay, so investor snatching up homes from homebuyers is something I've been watching closely over the past few years. Unfortunately, it's getting much worse, and the trend is growing like a wildfire in a dried out prairie. Over the last several weeks, I put a lot of research into this video. So coming up, we'll talk about this more and how it affects you if you're buying a house or selling one this year. Now, one thing is for sure, if you're planning on buying or selling a house this year, you'll want the right realtor on your side. A realtor with firsthand, real-world knowledge of the current real estate market will help safeguard what's most important to you. If you need help finding one virtually anywhere in the United States, then go over to homeandmoney.com/Andrew. Thank you. So earlier this year, when I listed a house for one of my clients, something happened I'd never seen before. It wasn't the 18 offers we received in the first day of listing. We all know about the massive housing shortage plaguing the already strained real estate market right now. Even though many of those offers were much higher than the list price, that didn't surprise me. No, what set off my alarm bell, just like my 4:30 alarm to wake up in the morning, that just seems to get louder and louder until I finally dragged myself out of bed to turn it off, was the 8 of those offers came in from big investors. To be honest, before then, I've never seen so many corporations make an all cash above list price offer for a house. I mean, it's just crazy. Quick note, no, the seller did not accept the investor's proposal despite the money tossed in their direction. Good people do exist in this world, just like the seller who recognizes the challenges home buyers face and chose to accept a real person's offer, not enrich a corporation. To that first-time home buyer, it positively changed their life, and we wish you many happy years in your beautiful new home. So with mortgage interest rates going up and home prices to match, why are investors in the housing market right now? What's their angle? Investing in real estate right now seems counterintuitive and counterproductive for investors who believe in the buy low, sell high strategy. So what's their end game? I knew I needed to go into recon mode to hunt down the details to get to the bottom of this. FYI, when a Marine is on a mission, no mission will hide or slide. To be honest, it felt like I was becoming an investigative journalist in the process, kind of like Lisa Ling with her documentary series, This Is Life. By the way, if you haven't seen her show, I highly encourage you to check it out sometime. It's brilliant. Anyhow, every lead I followed took a bounce down a new rabbit hole, so I took a step back to gain clarity and design a game plan to share the volume of research I did with you in 17 minutes or less. So I'm going to share the technique I use to prepare you for what comes next. I found by focusing on 5 fundamental questions, you'll gain insight into number 1, what is the situation? Number 2, what is the motivation? Number 3, who are the key players? Number 4, how are they getting the money and what is their strategy? And number 5, most importantly, how will all of this affect you? So let's begin. What's the situation? Both first-time homebuyers and homebuyers are being forced out of the real estate market by large investors backed by powerful corporations with billions. Yes, that's with a B, billions of dollars to spend. These corporations, in many cases, are bidding above list price with all cash offers in an attempt to elbow out first-time homebuyers, as first reported by Reuters. Perhaps you were one of the buyers that were priced out too, just like one of our Home Tribe members, April, who says, "The housing market is insane. Even as a federal employee making a decent wage, I still have no hope of being able to buy a home anytime soon. Even the rental market in the Denver metro is out of control. My focus is just saving and paying off debt and saving what I can. Maybe by 2024, I can hope to buy a house." April, I feel your pain, my friend, and I feel the pain of the over 1 million homebuyers priced out by investors last year. But why would multi-billion-dollar companies be willing to invest in real estate right now? We all know that interest rates are on the rise. In addition, we currently have record low inventory plaguing the housing market with super inflated home prices. For all of these reasons, one would think now is not a good time for investors to make a property grab like Elon Musk grabbing land in Austin, Texas around his new gigafactory. How bad is it? Well, remember in the opener of this video, I shared with you over 1 million homebuyers were cheated out of buying a house in 2021? Well, yeah, it's time to back up the facts with the deets. To do that, let's recap the quarterly reports of investor home purchases as tracked by Redfin. For reference, Redfin defines an investor as any institution or business that purchased residential real estate. So let's take a look. In the first quarter of 2021, investors accounted for 14.9% of homes purchased. To say it another way, investors bought about 1 of every 7 US homes for sale during the first quarter. In the second quarter of 2021, investors purchased 15.9% of the available homes, or roughly 1 in every 6 homes for sale, wrapping up the second quarter. In the third quarter of 2021, Redfin initially reported that investors bought 18.2% of the total homes for sale. They later revised the third quarter rate to 17.4%. In the same post, Redfin senior economist Shahriyar Bokhari said, increasing home prices fueled by an intense housing shortage have created opportunities for investors to reap big profits. Hold that thought. Shahriyar goes on to say, those same factors have pushed more Americans to rent, which also creates opportunities for investors because investors typically turn the homes they purchase into rentals and can now charge higher rents. Talk about living between a rock and a hard place. Look, I've been there before and I genuinely feel your pain. I know firsthand how much it really sucks to rent when you really just want to buy a home of your own to live your best life. It sounds like Bokhari gets it too when he says, with cash-rich investors taking the housing market by storm, many individual homebuyers have found it tough to compete. We'll talk about who these investors are and where they're getting all of those billions of dollars in a moment. For now, let's keep going. In the fourth quarter of 2021, investors acquired 18.4% of the total homes sold in the fourth quarter. So now it comes down to some simple math to average the number of homes investors hijacked from homebuyers in 2021. All we need to do is add up the percentages for each quarter. As musician Acraze sings, let's do it to it. So let's add 14.9% for the first quarter, plus 15.9% for the second quarter, plus 17.4% for the revised third quarter rate, plus 18.4% for the fourth quarter. That equals 66.6%. Now, that's an eerily freaky number. Truth is so much stranger than fiction. Let's move on. Now, what we do is we take the 66.6% and divide by 4 for the 4 quarters in a year, which comes to a 16.65% as an annualized rate, which represents the average amount of total homes that investors clutched away from homebuyers in 2021. As a percentage, it may not seem too alarming, but consider this for a moment. According to Statista, an estimated 6,120,000 existing homes sold in 2021. So now, let's make it real with some math. If we take 6,120,000 total homes sold and multiply by 16.65%, that comes to 1,018,980 homebuyers that had their homeownership dreams crushed like a horrific nightmare by prominent investors in 2021. To put it another way, that's 1 in 6 homes that investors pocketed in their ballooning portfolios. That's just sad. Why would anyone, even a corporation, do that to someone? So let's talk about the investor's motivation to find out. It boils down to what they believe will happen with home appreciation and rental prices. In my last video, we talked about how Zillow updated their housing forecast after saying their first prediction was way off the mark. In Zillow Group's updated analysis, they say that home prices will rocket to 16.4% by the end of the year, while Goldman Sachs thinks housing prices will go up by 16%. Apparently, the investors feel even more bullish than the bull that charges a matador. Keep in mind, every matador has a sword. Now, let's take a quick look at the rental prices. In Zumper's 2021 annual rent report, they found rental rates jumped by 11.6% year over year. To back up Zumper's findings, CoreLogic provided a very in-depth analysis of the 2021 rental price growth. Using the CoreLogic National Single Family Rent Chart, we can see between 2011 all the way up to the pandemic, rental rates stayed pretty consistent between 3% to 5% variations. Then, going into 2021, just like the price of homes, the rental rate skyrocketed, finishing 2021 with 12% rental growth for single-family homes. Molly Bolzel, who authored the CoreLogic report, sums it up when she says, single-family rent prices in 2021 increased by more than 3 times the 2020 rate. In addition, affordability challenges and limited supply created barriers to home purchasing for many prospective homebuyers. These factors have driven elevated demand for single-family rentals and put increased pressure on the market as vacancy rates also hit historic lows. So, who are the key players? Now it's time to dive a little bit deeper into who the key players are pulling the strings behind the curtain. On average, the investors fall into 2 classifications. The first classification is called iBuyers. The second are called institutional investors. So that begs the question of what is an iBuyer and an institutional investor. NerdWallet defines an iBuyer as an instant buyer, being a real estate company that uses algorithms and technology to buy and resell homes quickly. Much like a flipper does in many ways, except this convenience comes with a very high price to home sellers. Sellers, listen up. The devil's in the details. Remember this, and if you want to know more, click the card above after watching this video. The top iBuyers include companies like Opendoor, OfferPad, and Redfin Now, to name just a few. Now, here's something interesting to know. If an iBuyer is unable to sell the house they just purchased in the open housing market, then they will sell it to an institutional investor. In this article by MN News, they highlight the fact that iBuyers sold up to 70% of the homes they purchased in 2021 in some areas to institutional investors. Talk about having a built-in big business fail-safe in place. So what is an institutional investor? Well, Investopedia says an institutional investor is a company or organization that invests money on behalf of clients or members. They include hedge funds, mutual funds, and endowments. Those are examples of institutional investors. To put it another way, an institutional investor also manages real estate investment trust, or REITs for short. Before we bounce off the Investopedia page, there are 3 more key takeaways you should know. Number 1, institutional investors are considered savvier than the average investor and often subject to less regulatory oversight. Number 2, the buying and selling of large positions by institutional investors can create supply and demand imbalances that result in sudden price moves in stocks, bonds, and other assets. Number 3, institutional investors are the big fish on Wall Street. Who are these big fish? Stock Market MBA makes it easy to screen through them with their list of 176 REITs, including the 20 major residential REITs on their website. I'll drop the link in the description of this video so you can check it out later. A case in point is this Wall Street Journal article sums it up in the headline. If you sell a house these days, the buyer might be a pension fund. Earlier this year, CNBC interviewed the CEO of one of those REITs, Invitation Homes. The CEO is Dallas Tanner, and Invitation Homes has a market cap of just over $23 billion as of the recording of this video. Here's what he had to say when asked if they can continue the 2021 home buying shopping spree into 2022.
Are you still able to keep acquiring homes at the pace you would like?
We wish we could buy more, truthfully. I mean, demand is just so large for our product in terms of people wanting a leasing lifestyle. What we've started to do is really work with builders. We announced a partnership with Pulte last year. We're going to build almost 8,000 new homes over the next 5 years. So we're starting to see some of that come into our business, but supply is definitely tight.
Whoa, that's news to me. People prefer a leasing lifestyle? Okay, sure. I suppose different strokes for different folks and all that. At the same time, that's not the conversations people are having with me and what those conversations sound like. They want to buy a home of their own and get out of the leasing lifestyle. What about you? Do you want to buy a house or do you prefer the leasing lifestyle? Let us know in the comments. Thank you. By the way, I put a link to this interview in the description if you want to check it out for yourself later. From the sounds of it, these big corporations prefer to make America for rent, but unfortunately, they are putting profit before people versus putting people before profit. It seems they didn't get the word that there is no profit without people. Here's a vital fact of life. One should always put people before profit. The profit comes by focusing on helping people, or at least it should. By putting people first, one can still reap the profit by concentrating on what's truly important to the people. Just my 2 cents. Drop a line with yours. Thank you. How are they getting the money? They are receiving billions of dollars from investors like venture capitalists, their stocks, and real estate investment trust, or REITs for short. So with publicly traded companies, who are the ultimate cash cows with the power to turn off the cash flow? The investors, right? In this case, that's you and me. All of us who invest in stocks and mutual funds need to get honest with ourselves and where we invest our hard-earned money. We still can and should invest for a better tomorrow. Let's just do it more intelligently by investigating what the companies are doing with our money before investing. The most disturbing part to me is that the money many of us are investing into stocks that might include iBuyers and the mutual funds with REITs is we're doing that to save money to buy a house or for retirement. Yet that money, our money, is being used against us when purchasing a home and against others, our fellow humans, when they aspire to do the same. Look, we're always stronger and better together than we are not. The moment we wake up and come together is the moment we take back our world and our lives. Only then can we make the world a better place and one that we're proud to pass on to younger generations when our time here comes to an end. So what will our legacy be to our kids? Will it be one of anger and greed with each person out for themselves? Or will it be one of treating each other with love and kindness and working out challenges together? The choice is yours. Now, how will all of this affect you this year? It really depends if you're buying a house or selling one. If you're buying a house, just know that you'll be in competition with multiple cash buyers. So clarifying why you want to buy a home of your own and what you want in your new home is critical, along with assessing your financial comfort zone. Knowing that bidding wars are highly likely. Please don't lose yourself. Stay true to yourself. Consider your options. You too can compete with all cash offers, even if you don't have the cash. How so? With the rise of companies called power buyers, OfferMarket defines a power buyer as a home buying service that guarantees a buyer's offer through a cash-backed offer. Of course, a buyer still must qualify for this type of program. Power buyer companies include Homeward, Knock, and New American Funding, to name just a few. To find out how to qualify, I put a link in the description to help. When facing intense competition, it's all about considering all of your options. Better to have options and not need it versus needing options and not having one. I hope this helps you. If you're selling a house, I ask you to look within before accepting an offer from an investor. Yes, consider what is best for you and what will help you advance your life goals. At the same time, please think about how challenging it is for homebuyers in the current housing market. Will you still be able to achieve your goals by accepting an offer from a homebuyer, a real person, even if it's an offer contingent on an appraisal? Only you can answer that question. I hope that you'll consider paying it forward to home buyers buying a house this year. Now, maybe you're thinking, I don't know if I should buy a house now or wait. To help you decide, click here to watch if you should buy a home now or wait until 2023, or click here to find out how not to get screwed buying a house. Either way, the choice is yours. I'm sending you positive vibes, everything goes your way. I'm looking forward to seeing you in the following video.